Hello, hello, very good morning to all, and welcome back to today's Daily Dose of Market Insights. I'm Kelvin here. Very good morning. Today will be Tuesday, the 15th of July, 2025. So before we kickstart today's Daily Dose, let's have a quick look at the disclaimer first. All right, leverage trading carries a high degree of risk and may not be suitable for everyone. Losses can exceed deposits. This presentation is not an offer or solicitation to buy or sell, nor financial advice or recommendation for any investment product, as well as any forecast, prediction, or projection in this presentation is not necessarily indicative of the future or likely performance of the product. This advertisement has not been reviewed by the Monetary Authority of Singapore. All right, so as usual, before we jump straight into the intraday technical outlook on all those broad-based cross-asset classes that we cover on a daily basis, the 4 US dollar pair, the major stock indices, and as well as the two key commodities asset class, which is gold XAU/USD and West Texas crude oil. Let's have a quick recap what has taken shape yesterday in terms of news flow and economic data release, and as well as key economic data that has been released earlier this morning before the start of our daily dose at 11 a.m. Singapore time, and how does it impact the intraday movement on the broad-based cross asset classes. So let's start with the overnight US market session. So obviously the overnight US market session is rather choppy again. Yes, we start to see the major US stock indices have a couple of gain, managed to erase last Friday loss. So with the SPX up by 0.14%, the Nasdaq up by 0.33%, the Dow Jones Industrial Average up by 0.2%, the Russell 2000 up by 0.67%. So what's interesting over here is that the rally that has taken shape yesterday hit exactly at those respective pivotal resistance level that we highlighted in yesterday's daily dose, or kind of test that resistance level before doing a slight retreat in the last few minutes, or I would say that in the last hour of yesterday US session. All right, over here, so around 3 a.m. There was a slight retreat in the major US stock indices yesterday. So later I'll touch on more on the short-term intraday technical outlook. So one of the reasons why the market managed to do a slight bit upwards yesterday was, as usual, relating to tariffs news flow. So there was actually a kind of a report out from Bloomberg yesterday, stating that Donald Trump's latest tariff remarks sends stocks mildly higher over here. And what did he actually said? He actually mentioned that in his social media post that he's indicated that he's open to trade talks, even if he insisted that the letters which is sent out started last week, threatening new rates are the deals. All right, over here. And also corporate America right now, that means i.e. This week is the unofficial start of the Q2 reporting season as well. So later I'll share with you what are the names to look out for that could potentially see a significant movement on the respective major US stock indices in the third segment of today's daily dose. All right, and what's interesting is that so far the earnings expectation is not that great based on this Bloomberg report saying that corporate America is bracing for its weakest earnings season since mid 2023. But however, given that it's kind of a low ball number, that means i.e. Estimates could be easier for companies to beat. All right, over here. So if I have to click on this particular news flow, this is what I meant. Okay, over here. Yeah, so this is the aggregated US profit expectation, earnings expectation. So this is the EPS, earnings per share year-on-year change. So analysts on the aggregate over here, I would say analysts average EPS forecast as compiled by Bloomberg for this quarter is expecting to inch down lower to 2.8% year-on-year. Previously, it was 13.6% 13.6% year on year. That was for the first quarter. All right. So given such low ball numbers of 2.8% year on year earnings increase for Q2, it's going to be very interesting in this earnings reporting session over here, because why? If we start to see numbers that, I mean, companies numbers that's able to beat this low ball aggregate from here, potentially we may start to see further up movement on the major stock indices. But nevertheless, from a technical standpoint, there could be at least some form of minor corrective decline on the major US stock indices before the major US stock indices continues to actually surge higher potentially. All right, so later I'll share with you on the intraday technical outlook. All right, then also one thing I want to share with you highlight is just a while before we actually start our daily dose of market insight at 11 a.m. around 9 a.m. Singapore time, there's actually a news flow pertaining to NVIDIA. So we know that why NVIDIA is very important right now, because number one is an AI juggernaut, and we know that in the last 3 to 4 years, especially the last 2 years, majority of the gains that is being driven on the S&P 500 and the Nasdaq, especially the S&P 500 and the Nasdaq 100, not so much on the Dow Jones, but the former two major indices are driven by mega cap technology outperformance against the rest of the market. And this mega cap technology outperformance all centered around the AI team. And among this AI team play, the leader or the juggernaut is NVIDIA. So whatever happens to NVIDIA has a significant implication on the movement on the S&P 500 and the Nasdaq 100. And in some way or another, sooner or later, it will start to actually cascade down to the broad-based sentiment of the US stock market, and which also may impact the Dow Jones Industrial Average and as well as the Russell 2000, but that will come with a time lag. So what happened to NVIDIA this morning at 9 a.m. Singapore time? There was a news report released from Bloomberg stating that NVIDIA now is allowed to resume sales of its H2 artificial intelligence accelerator chip to China. So this H2 artificial intelligence chip that is a lower end, not the higher end, or not the best chips that NVIDIA developed so far, after it received assurance from the US government that it will be guaranteed license, the company said in a blog post. So that's actually very positive for NVIDIA. Why? Because earlier the CEO saying that, okay, here over here, the H20 is a less powerful version of NVIDIA AI semiconductor chips. This is specially designed for China. But however, the Trump administration in April enhanced those controls to capture the H2 level chips as well. That means, i.e., this H2 level chips is not allowed to be exported to China. And given the fact that this particular news was stating that US government is allowing NVIDIA to resume this H2 artificial intelligence accelerator chips to China, that would reduce $1 billion of losses, because the CEO, Jensen Wong, had previously said that NVIDIA would suffer cost of billions of dollars due to unsold H2 inventory. So that actually created a blip, an upside push up in the major US stock indices future this morning. What do I mean by this? So if you look at the, okay, right now they're actually at the unchanged mark. So the E-mini S&P futures and the Nasdaq 100 E-mini futures, initially there was a blip up and now there's almost unchanged. So what do I mean by this? So if you look at the chart of the E-mini over here, okay, let me share with you guys. Yeah, this is the one. Okay, so this is the, okay, give me a minute. Yeah, so this is the chart of the E-mini. All right, so this line here, right, that are in green, in what, light blue, this is the Asia session. That means this is the non-US session. So the US session closed at 5 a.m. Singapore time. Then over here is the we call it the Globex session, where the Nasdaq E-mini, this Nasdaq, the Nasdaq E-mini futures continues to actually trade almost like a 24-hour market, or I'll say a 23-hour market, because there's actually a dead zone between 5 a.m. to 6 a.m. Singapore time. So what I could see over here is that at 9 a.m. mark over here, there's a push up. There's this white Marubozu candlestick. So this white Marubozu candlestick is due to this particular NVIDIA positive news flow, where the US government allow it to sell the H20 artificial intelligence chips to China. So it created this blip up, but thereafter, after the 10 a.m. hour mark in the Singapore time, that means after 10 a.m. Singapore time, this particular we call it earlier positive push up does not have a positive follow through. So almost 50%, almost I would say 50% of the gains were actually reduced when the 10 a.m. mark kickstart Singapore timing. All right, this is the Nasdaq 100 E-mini futures. Similar on the okay, give me a minute. On the S&P E-mini futures as well. Over here. All right. So this particular white Marabuzu candlestick is actually due to that positive news flow for Nvidia at 9 a.m. Singapore time. But however, at the 10 a.m. Singapore time, the earlier positive momentum fizzled out. So that is not a great price action follow through in terms of technical analysis perspective. And this initial push up by this Nvidia news flow doesn't seems to be great for me. So it seems to be a kind of a fake push up as being portrayed by the latest price action on the E-mini futures on the S&P 500 and the Nasdaq 100. All right, and that's for the equity market. And very interestingly, still touching about the equity market, there is actually one key China data, or a couple of key China data that is out earlier this morning at the 10 a.m. mark, 1 hour before the start of our daily dose at 11 a.m. Singapore time. And in fact, half an hour earlier, 9:30 a.m., we have the housing price index of China. Why this housing price index of China is very important? Because we know that close to about what 70% of household wealth in China is being tied to the housing market. And we know that the housing market in China, due to government policy, has been in the doldrums for the past 5 years or so. And that actually kind of trigger off a deflationary risk spiral in China. So we know that if there's a deflationary risk spiral in China, consumer and business sentiment will be weak, and that doesn't actually gels well to the trend or the bullish doesn't gel well for the stock market in China and as well in Hong Kong if the deflationary risk continue to persist. So the key crux of it all depends on how the health of the property market evolve in China. So if you look at the housing price index so far, yes, it has been in negative growth, but this negative growth continues to slow down. All right, so in the previous month it was negative 3.5% year on year for the month of May, and right now it hit negative 3.2%. So the pace of slowdown has started to indeed stabilize. So if you look at the housing price index, all right, so while making the 24th consecutive month of contraction, this latest reading for the month of June, which is a 3.2% year on year, is the slowest pace since April 2024. All right, so that's close about a year lower. So if I were to actually put up the trend, a 10-year trend over here, okay, so there seems to be turning around the corner, all right, on the housing price index. But so far, we got to see a series of higher high and higher low before we can confirm that the circular downtrend that has kickstarted in 2017 on the housing price index of China starts to see a bullish trend reversal. But we know that in the last few months, it's not continues to decelerate on the downside, and the contraction starts to slow down, which is actually a positive sign for the Chinese economy, and indirectly also a positive sign for the local stock market over here. All right, so just give me a minute just to confirm that is everything working fine on the screen or whatever. Okay, just give me a couple of seconds just to show that everything is fine. I hope that the voice is good, the screen is, you guys are able to see the screen. Okay, I think should be fine. Okay, let me continue. So yeah, where was I? Yeah, so this is the China home price index. So it's a positive sign given the fact that it's a positive sign for the local China stock market and the Hong Kong stock market, given the fact that the housing price index is not decelerating steeply on the downside, and the deceleration has started to slow down, and the 3.2% year-on-year print for the month of June is the slowest pace since April 2024. So other indicator that came out at other tier 1 China economic indicator that was released earlier at 10 a.m. Singapore time inclusive of the Q2 GDP growth. So market participants are pretty much worried at the start of this year that whether GDP growth target as set by the Chinese top policy makers, are they able to achieve that 5% target in 2025, given the ongoing hostility between China and US over trade situation, and as well as the ongoing war in the high-tech arena. So yes, so far the year-on-year growth Q2 managed to actually beat or the 5% target that is being set by the China top policy makers, which they want to achieve an annualized growth rate of 5% in 2025. So it grew by 5.2%. So that is slightly lower by 2 basis points from 5.4% printed in the month of Q1. Which is pretty remarkable given the fact that the hostility between US and China kind of exacerbated to the upside after that announcement of that April 2nd Liberation Day from Trump himself. So he also managed to beat expectations slightly at 5.1% year on year. So talking about industrial production also came in better than expected. So industrial production is more linked to the external sector of the Chinese economy. That means that comprises of exports. So that is all came in line with the export beat yesterday, where the export growth managed to surpass above expectation at 5%. Market the actual number came in at 5.8% year on year for the month of June. So that also we call it has a direct link where industrial production also grew stronger than expected, 6.8% year on year from 5.6% expectation and above 5.8% year on year for the month of May. So, but however, the internal economy of China that comprises of domestic consumption, which is retail sales. So retail sales growth slowed down further than expected. So market is expecting a slowdown to 5.6% from 6.4% year on year printed in the previous month of May. The actual numbers came in slower than expected. The growth by still growing, but grew at a slower pace at 4.8% year on year. All right. So net overall, I would say that it's more positive than negative, but due to the fact that it seems to us that the central government got to actually do more to start to boost up domestic spending, given the fact that if the ongoing situation between US and China does not improve, and if US starts to continue to build up further hawkish rhetoric towards China over international trade, the industrial production situation in China may start to slow down. And given the industrial production or the export growth is the current primary driver of China getting to hit the growth rate of 5%. If industrial production and export growth temper off, domestic consumption got to come in to actually pick up the slack. In order to do so, the central government got to actually starts to think of more innovative stimulus policy to boost consumer sentiment. All right, so that's for the news flow that has taken shape and economic data that has taken shape this morning before the start of our daily dose at 11 a.m. So now let's look at the movement of the FX market. So the FX market, if you look at the 5-day rolling performance, the dollar continues to remain strong against the major currency, and the 5-day rolling performance as of now we are speaking is the strongest against the sterling dollar, up by 1.19%, and secondly against the dollar yen, up by 0.67%. And what's interesting over here is that the dollar strength or the dollar bounce came in within our expectation, where we do have a bullish bias on the dollar in the FX market in our short-term intraday technical outlook for the past few sessions for those who actually follow our daily dose on a daily basis. But however, after that, if you look at the short-term time performance, by looking at the one-day rolling performance. So the one-day rolling performance in today's Asia session, we start to see a big sideway where the dollar strength has starts to temper off across the board, all right, at 9 a.m. Singapore time. All right, at 9 a.m. Singapore time, you see the dollar strength starts to slow down. So the reason why the dollar strength starts to actually temper off is also because of a key risk event that is about to take shape in the US session later this evening, Singapore time, will be the release of the all-important US CPI data that could potentially impact the monetary policy expectation from the US Central Bank. All right, so later I'll touch on what time is the release of the US CPI data and what is market expecting from the CPI data from the month of June in the US. So let's take a look at the expectation as being priced by the Fed Funds futures traders based on data compiled by the CME Fed Watch tool. So the Fed Funds futures traders are still expecting the Fed to be on hold for the upcoming FOMC meeting on 30th of July ahead of today's release of the US CPI data. So market expectation 95%, no change on the Fed funds rate at 4.25% to 4.5%. So only a 5% chance that the Fed will cut by 25 basis points on the 30th of July 2025 FOMC meeting, which is the end of this month over here. So if you look at the past few weeks, the expectation is almost unchanged. 1 week ago is what, 93.8%. 1 day ago it was at 94.8%, and now it's at 95%. So almost the Dow didn't actually change much. So let's look at the aggregated probability, where we are able to see what is the expectation down the road on future FOMC meeting, other than the latest one that is coming in on the 30th of July. So market is still expecting a high probability that the first 25 basis point cut in 2025 by the Fed potentially could come in on the 17th of September 2025 FOMC meeting, where market assign a high probability of 65%. So this market I'm referring to is the Fed Funds futures market, all right, not the S&P, not the US Treasury market or over here. And thereafter, it will stampede. That means first cut comes in the 17th of September 2025 meeting, and it will be a 25 basis point cut to bring it down to 4% to 4.25%. And thereafter, potentially it will remain on hold on the 29th of October 2025 FOMC meeting, because there's a high chance of it at 78% so far. Only 22% chance that it will ignite a second cut on the 29th of October. So the second cut potentially has a higher probability or higher chance at 93%, that's rather high, to come in at the last meeting of 2025, which is the 10th of December 2025. So that's 93% chance to bring it down to 3.75% to 4%. So what market is assigning over here is potentially 2 interest rate cut by the FOMC, which is the US Central Bank. That means, i.e., there is still going to be interest rate cut coming into the market rather than 1 cut or 0 cuts as being priced by the FOMC, as being priced by the Fed Funds futures trader. So potentially that also could potentially see, we call it imply further dollar weakness once the Fed starts to give more clarity on the start date of this interest rate cut cycle in 2025, because so far in 2025 there has not been cutting interest rate, whilst the rest of other major central bankers has already almost cut their interest rate, or even some of them has already cut so much that it's about coming to the tail end of this interest rate cut cycle, which is one example is the ECB, which is the European Central Bank over here. So that's potentially sum up the first segment of today's daily dose. So let us now move on to the second segment, which is our intraday technical outlook on all those broad-based cross asset classes. So before we start that, let me expand my screen over here. Right, good. So now let us start with the FX market over here. All right, starting with the euro dollar. So the euro dollar yesterday we do have a bearish bias over here. The first support level to watch will be at 116.30. Price action they hit 116.30. It printed the lowest level for yesterday was at 116.54. Okay, 116.54. Slightly above 116.30. That was being seen during the start of the European session. Then thereafter, it attempted to actually sell off again during the US session at 12 a.m. Singapore time, but can't break below 116.54. So it printed the intraday low of 160.60 during the US session before trading sideways around the 20-day moving average as the US session unfolded yesterday and also in today's Asia session right now as we are speaking on the hourly chart of the euro dollar. And what's interesting over here is that while doing this sideways movement pattern on the raw price action of the euro dollar chart, the momentum indicator, which is RSI, hourly momentum indicator, starts to slope up very obviously and starts to print out a series of higher low after hitting the oversold region on last Thursday. Right, so that's actually indicate a slowdown of downside momentum that has taken shape last Thursday as well, 10th of July. So given this slowdown of downside momentum, this could be a turning point on the euro dollar to start to actually do a more pronounced recovery, or potentially yesterday's low could be the end of this minor corrective decline that has taken shape since the high of 1st of July. So still recall in my daily dose, whatever bearish bias view I have on the euro dollar, it's still a minor corrective decline within a medium-term uptrend phase of the euro dollar that is still intact, because price action continues to evolve within this medium-term ascending channel that is still running from the low of 13th of May 2025, and price action continues to trade above the 50-day moving average as well. So with this positive price development as being seen yesterday and transpired onwards towards the positive movement on the hourly RSI as well. So today we have no conviction to maintain our bearish bias on the euro dollar, and we will now flip back to a bullish bias stance on the euro dollar using 116.30 on as my short-term pivotal support level. First resistance level to watch will be 117.10 for today. So this is an upside trigger level. Why upside trigger level? Because that was being rejected on last Friday, and also correspond to this ongoing downside or ongoing minor descending trend line resistance that managed to cap the boost in check since 3rd of July. So a breakout above 117.10, which is a potential upside trigger level, will increase the chance of a start of a bullish impulsive upmove sequence on the euro dollar in first step, for the next intermediate resistance to come in at 117.70. All right, so these are the two key resistance level to watch out for today in my bullish bias intraday view for the euro dollar. However, if price action starts to break down below 116.30 for hourly close below it, then potentially we may see the residual push down to expose the next intermediate support level at 115.80 over here, which is the exactly at the medium-term ascending channel lower limit, which is the medium-term ascending channel support. We also confluence with the minor congestion area of 17th of June and 24th of June. So if price action starts to float down at 115.80, I will be looking out for signs of bullish reversal candlestick to be ready to flip back to a bullish bias again, because it's at the medium-term ascending channel. All right, only a continuation of a down move towards 115.80, then potentially this minor corrective decline sequence may extend further towards the downside towards 115.10, which almost correspond to the upward sloping 50-day moving average. So that's for the euro dollar, flipping to a intraday bullish bias for today using 116.30 as my short-term pivotal support. Up next will be the sterling dollar. So the sterling dollar continues to underperform the euro dollar as price action continues to drift downwards and pierce below the 50-day moving average, but managed to still hold above the medium-term ascending channel support that is still in place since the low of 13th of January 2025, and now is coming to our second support level at 133.75, And what's interesting over here is that the hourly RSI starts to shape a bullish divergence after hitting the oversold level again yesterday by printing a higher low. So this higher low indicate a slowdown of downside momentum as well. So with that, I'll be flipping to a intraday bullish bias as well on the sterling dollar using 133.75 as my short-term pivotal support level. Two resistance level to watch. Firstly will be at 134.90, which is the 50-day moving average. Above it sees 135.45 in first step. Coming in next, which is the descending trend line that is in place since the high of 1st of July. So the key levels to watch next will be 135.80, which is a 20-day moving average. So if you start to see a clear breakout with the hourly close above 135.80, potentially we will say that this minor corrective decline from 1st of July all the way down to 15th of July yesterday might have ended, and the price action of the sterling dollar could potentially shape the fresh new impulsive up movement upon breaking above 135.80. But however, if price action starts to continues to drift downwards and have an hourly and a bearish breakdown below 133.75, if hourly close below 133.75, that will indicate an invalidation of today's bullish bias to continue its minor corrective decline sequence, exposing the next support level at 133.25, followed by 132.50 next. So that's for the sterling dollar. Next up will be excuse me, will be the Asia Pacific currency, starting with the Aussie dollar. So the Aussie dollar, yesterday we have a neutral bias, given that it's in the middle of this sideways range between 66 figure and 65.40, and right now it drifted down exactly back to the lower limit at 65.40, which managed to test a couple of times since yesterday US session and even in today's Asia session as well. So we start to see kind of a higher low that starts to form on the hourly RSI, okay, which is also a positive development. So with that, potentially it could swing back up to the top of the range again. So given that it's at the bottom of the range with this positive development in the hourly RSI by shaping a higher low, indicating that yesterday's push down, its downside momentum has started to slow down. So using 65.40 short-term pivotal support level on the Aussie dollar, we will flip back to a intraday bullish bias stance, but within this minor sideways range configuration with the top of the range at 66 figure level coming in next over here. So one more resistance to take a look at will be the high of yesterday's Asia session, all right, which is at 65.75. So 65.75 taken out, potentially we could see the retest at this minor range resistance at 66 figure level that also correspond closely to the 11th of July minor swing high. However, if price action starts to do a breakdown below 65.40, today's intraday bullish bias within this minor range configuration will be invalidated to see a further drift downwards towards 65.10, followed by 64.80, which correspond to the rising 50-day moving average. So that's for the Aussie dollar. Lastly will be the dollar yen. So the dollar yen now drift up as expected and now hit the range resistance level, which is potentially this descending trend line that I drew from the high of 13th of May. All right, so if you observe the hourly time frame chart of the dollar yen, very interestingly, price action shape a higher high, but the hourly RSI has started to shape a lower high after hitting a overbought level on last Friday, and it's going to print to lower high, indicating the lack of upside momentum as price action starts to squeeze up in early Asia session today. So with that, we will now flip to a bearish bias given this bearish divergence that's being printed out, and we are now also coming to the top of that symmetrical triangle range configuration. So using 148 figure level as my short-term pivotal resistance level on the dollar yen, we will flip to a bearish bias. Downside trigger level will be 147.20, which is also the minor ascending channel support that I drew from the low of 1st of July. A breakdown below this 147.20 potentially could see a further drift downwards to expose the next near-term support level at 146.80/145.55 next. Below it sees 145.85, which is also coming very close to this 20-day moving average. However, if price action starts to push up higher above 148 figure level, today's bearish bias view will be invalidated to see a further squeeze up towards the next resistance at 14860/149 figure level next. Okay, which is this minor swing high area of 13th of May, and as well as this minor congestion area here of 2nd of April. Right, so that's for the dollar yen. So now let us now move on to the major stock indices, starting with the Hong Kong 33 over here. So the Hong Kong 33 right now continues to drift downwards. All right, over here. So yes, in early today's Asia session, it hit our first resistance level at 24,490, and right now it's actually back at 24,050 over here. So given this impending bullish hammer candlestick that's being formed, I'll be still watching, okay, because it's now back towards the lower limit area, so no point have a neutrality level. So given this bullish hammer candlestick that is being formed right now as we are speaking on the hourly candle, which is the Hong Kong 33 CFD index that's representing the Hang Seng index, we will still maintain that bullish bias over here, because initially the price action is somewhere drifting around this level here at 24,318. So initially I was wanting to have a neutrality stance, given that it can't break above 24,490, and given that now it has started to form a potential bullish hammer candlestick, there could be some signs of bullish momentum that is still intact on the Hong Kong 33. So with that latest price development, we will now maintain our bullish bias given the latest price action as we are speaking right now. All right, in this live environment. Okay, short-term pivot. Okay, so using 24,050, the similar short-term pivotal level that we highlighted yesterday as well, we will still maintain that bullish bias, but the first resistance they got to surpass will be this morning retest at the 24,490 before that sell-off takes shape over here. So only a clear breakout above 24,490 potentially sees the next resistance coming in at the medium-term swing high area of 18 and 19 of March at 24,850 next. However, a price action managed eventually can't inch up higher and starts to pierce down with an hourly close below 24,050. Today's intraday bullish bias view will be invalidated to see a further drift down towards 23,690, which is the 50-day moving average, and as well as the minor ascending channel support that I drew from the low of 2nd of June. All right, so that's for the Hong Kong 33. Next up will be the Nikkei 225 or the Japan 225, representing the Nikkei 225. So the Nikkei 225 managed to survive at the 20-day moving average, but so far it cannot break above this minor descending trend line that is still forming since the minor high of 8th of July over here. So it seems to me that since 8th of July is now forming a bullish minor descending wedge configuration with the wedge lower limit at 39,145. So it's the middle of the wedge over here. So we will have a neutrality stance for today on the Japan 225, neutral between 39,670 and 39,145 for now. Right, given it's the middle of this potential bullish reversal minor descending wedge configuration. So that could be a we call it potential test at the 39,145 before staging that bullish reversal turning point on the Japan 225. So for now, neutral between 39,670 and 39,145 on the Japan 225. Next up will be the Germany 30. So Germany 30, yesterday we do have a bearish bias view because price action almost hit the first support that we highlighted, which is 23,950, printed a low of 23,974 and 23,982 during the late European session over here, or the middle part of the European session, pardon me. So with that, price action on the hourly RSI has started to form a higher low after hitting the oversold level over here, and also form a bullish divergence. So I could see here, price action almost sees similar low but the hourly RSI starts to clearly slope upwards and form a higher low. So that's considered as bullish divergence as well. So given this bullish divergence that's being formed on the hourly RSI, for today, I have no conviction for the price to maintain a bearish bias view to see the retest of that second support level, which I highlighted yesterday at 23,815, which confluence with the rising 20 and the 50-day moving average. So for today, I will flip back to a intraday bullish bias view on the Germany 30, representing the German DAX. Also, given the fact that yesterday's bullish divergence on the hourly RSI also came close for the price action, raw price action to retest the lower limit of this minor ascending channel that I drew from the low of 20th of June. So given such positive element, we will be flipping back to a bullish bias stance on the Germany 30 for today, using 23,950 as my short-term pivotal support level. First resistance level to watch will be 24,320. A clearance above this level potentially expose 24,520 next. Only an hourly close and a bearish breakdown below 23,950 will negate today's bullish bias view to see a potential residual push down to test the next intermediate support level at 23,815, which so confluence with the 20-day and the 50-day moving average. So upon reaching 23,815, I'll be on the lookout for bullish reversal candlestick pattern for a chance to see a will there be a potential turnaround on the upside at 23,815, given that it starts to confluence with a couple of key technical elements on the Germany 30. Okay, now let us move to the major US stock indices, starting with the Dow Jones Industrial Average, representing the US, which is the US Wall Street 30, pardon me, representing the Dow Jones Industrial Average. So the Dow Jones Industrial Average also see that blip up during the start of today's Asia session at 9 a.m. Singapore time. Then after that blip up, there's no positive follow through and price action starts to form a black color candlestick. So with that, still no change, still maintain our bearish bias view using 44,480 as my short-term pivotal resistance level. First support level to watch will be at 44,170, which is yesterday's test of it during the start of the Asia session. Only a breakdown below 44,170, so that considers a downside trigger level, may increase the odds of the start of a minor corrective decline sequence within its medium-term uptrend phase that is still intact to expose the next near-term support level at 43,800/43,600, which correspond to the rising 20-day moving average. However, if price action starts to do a breakout above 44,480, then potentially we could see a further upward drift upwards towards 44,850. Above it sees a potential retest at the current all-time high at 45,100, which is the current all-time high of the US Wall Street 30 printed earlier in December last year. Right, so now moving on, next will be the SPX 500. So the SPX 500 also did a test during the Asia session at the short-term pivotal resistance, or the pivotal resistance that we highlighted at 6,290. So still no change for sure. 6,290 is indeed a stiff level on the upside to watch, given that it got rejected since 3rd of July, got rejected again on 11th July, and got rejected again during today's Asia session. So still maintain that bearish bias view. So it's more like a sideways range configuration. So first support level to watch will be 6,220. Only a breakdown below 6,220, where S&P 500 managed to bounce during the start of the European session yesterday. A breakdown below it potentially trigger off a minor corrective decline sequence, exposing the next near-term support level at 6,180, which is correspond to the rising 20-day moving average as well, very closely. However, further push up with a clear hourly close above 6,290, then that would invalidate today's intraday bearish bias view on the S&P 500 to revert the situation back to the bulls, potentially also see the start of a fresh impulsive bullish up move sequence to resume on the SPX 500 for the next resistance to come in at 6,330/6,355, followed by 6,370, 6,380, which confluence with the so-called Fibo extension cluster level. Okay, so that's a fresh all-time high already. Right, new fresh all-time high. So next up will be the Nasdaq 100. So the Nasdaq 100 initially did a blip up and thereafter floated back down to the pivotal resistance that we highlighted at 22,920. That price action got rejected since 3rd of July. So what we could see right now is that this blip up is caused by NVIDIA, a positive news flow in early Asia session today at the 9 a.m. Mark Singapore time. So we will have a bit of excess for today. We tolerate a bit of excess on the Nasdaq 100 using 23,020. So still maintain that bearish bias view, 22,920 excess at 23,020. First support level to watch will be this range support over here. So let me put it in writing. Okay, so very clearly this will be 22,600. Okay, a breakdown below 22,600 potentially kickstart this minor corrective decline sequence, exposing 22,360 / 22,235 next. However, if price action starts to break out above 23,020, then we will start to see the start of a fresh bullish impulsive up move sequence on the Nasdaq 100 to breach a fresh all-time high at 23,190, followed by 23,400 / 23,480 next, which is the Fibo extension cluster level. Right, so that sum up the intraday movement on the intraday technical outlook on these major stock indices. So very quickly, let us now focus our attention to the commodities asset class, starting with Gold XAU / USD. So for Gold XAU / USD, yesterday was rather a choppy movement. It didn't clear above the 3,360 level. So what is 3,360 level? Let's very quickly go to the daily chart of gold. So if you look at the daily chart of gold, 3,360 is indeed a range resistance, a minor range resistance that has been in place since 24th of June this year. All right, so price action yesterday initially have an intraday break at 3,375, but can't have a daily close above 3,360, and it floated downwards. But what's good over here is that yesterday's price rejection at the 3,360 didn't breach below the 20-day moving average. It managed to hold above the 20-day moving average, the one in red line over here, and it starts to now shape a positive price action after a retest at the 20-day moving average yesterday. Right, so if you go down to the hourly chart, you are able to see more clearer of what I meant. Right, so there's this 20-day moving average over here at 3,340 level. So that was the first support that we highlighted yesterday. So given that it hasn't break above that 3,360 properly, we do not want to tighten my short-term pivotal support to 3,340. So for today, I'll still maintain my pivotal support at 3,328, which was the same as yesterday, which is close to the 50-day moving average, and as well as the medium-term ascending trend line that is still in place since 31st of December 2024 low. So with that, still maintain my intraday bullish bias using 3,328 as my short-term pivotal support for gold. First resistance level to watch will be 3,375 level over here, which was yesterday's intraday high. Above 3,375 potentially exposes the next intermediate resistance at 3,400 in first step. However, if price action see a bearish breakdown and hourly close below 3,328, then potentially this this bullish move will be invalidated to kickstart another choppy corrective decline sequence on Gold XAU / USD to see a further drift downwards to retest the 9th of July minor swing low area at 3,293 / 3,282. Right, so lastly will be the West Texas crude oil over here. So the West Texas crude oil initially did a squeeze up, but this squeeze up can't maintain that bullish momentum and starts to drift downwards. So this is considered as a failure bullish breakout above the 20 and above the 200-day moving average. So price action continues to drift downwards again, back towards this lower limit of this sideways range configuration that is still in place since the low of 25th of June. So with that, still using 69.15 as my short-term pivotal resistance level, which is the 20-day and the 200-day moving average, where price action failed to break convincingly yesterday, and now it's breaking down below 67 figure level over here. So the next support level to watch will be at 66.10, followed by 65.20. If price action can't hold above 65.20, potentially we could see a bearish range breakdown configuration to expose the next support level in the very short-term time frame. Will be this minor swing low over here at 62.75 next for the West Texas crude oil. Okay, 62.75. Okay, let me put it in writing. Give me a couple of minutes for it to show up, or a couple of seconds. All right, come on, why is it slowing? Right, so usually while we are speaking, right, okay, yeah, it's a bit slow. Okay, 62.75. Okay, however, if price action starts to reintegrate back above 69.15 level, then today's intraday bearish bias view on the West Texas crude oil will be invalidated to see a squeeze up towards 70.60 next. Above 70.60, potentially could see a more pronounced corrective rebound scenario for the next intermediate resistance to come in at 73.60, which is the former minor swing low area of 19th of June and 20th of June, and as well as the 61.8 Fibo retracement of that previous sell-off from 20th of June all the way down to the low of this minor range configuration that has kick-started since 24th of June. All right, so that's West Texas oil, and that's also sum up the intraday technical outlook on all the broad-based cross asset classes. So before we go, let's have a quick look at the economic calendar. What are the key data to look out for today? So like I explained, today is US CPI inflation data. So before US CPI inflation data, there are one European specific data I would like to highlight will be the ZEW Economic Sentiment Index. So that's considered as a tier 1 economic data in Eurozone, out at 5 p.m. Singapore time. That could potentially impact the euro dollar, the euro crosses, and as well as the Germany 30 CFD index. Then that will be followed by 8:30 p.m. Canada inflation rate for those who have interest in dollar CAD and the CAD crosses. And at the same time, at 8:30 p.m., we will have the US CPI data. So for US CPI data, the core inflation rate, market is expecting to drift up to 3% over here. So market has starts to price in uptick in core inflation data. All right, at 3%. So that has already starts to so-called being reflected in the recent days rebound of the dollar. So if the core inflation came in as expected, so market has really take that into account by pricing in the dollar rebound that has been seen in the last 3 sessions, that could see the dollar weakness coming back into the picture again, because that's already been